Good evening, students. Welcome to this discussion on auditing aspect. So a couple of topics to be covered for today, internal audit and the group audit. Okay, so now for the purposes of our discussion, what we will do is we'll just talk about this topic first of all, maybe briefly, because I understand that you have gone through this already. So it's more of the revisionary aspect that we need to work on. And then, of course, once we are through with some of the aspects related to the topic that we cover, we'll get on to the questions. Okay, so now in terms of various practical questions, we'll pick up some of those from the RTP as well, from the past question papers. Okay, so just to get an insight as to how this question is required to be attempted, if at all it's there in the exam in relation to that particular topic. Yeah. Okay, so now I'll start my discussion with internal audit. So now what is an internal audit? Let's try to understand about it. What is the scope of internal audit? And of course, when we get on to any sort of internal audit in relation to any entity, what are the considerations that the internal auditor should have? Okay, so now, first of all, if let's suppose we talk about internal audit. So the question arises, what do you mean by an internal audit? Now, unlike an external audit, when we say external audit, I'm just referring to the statutory audit over here. Internal audit, you can say, refers to a process of the organization through which the organization will look into the review of their control mechanism. Now, when you look at any entity today, so whether you talk about medium-sized companies, large-sized companies, and even if you look at some of the small setups, you find that there is a need for internal audit. Why? Because whenever you will look at any process of the entity, so what do you have? You will have various activities around that process. Right? So now in relation to those activities, which the management will set up, management will also set up some risks, which the entity needs to take care, which the entity would have identified, or you can say the management would have identified. And once that is done, management would have also looked into the internal controls around that. Yes or no? Because if let's suppose you identify a risk that's been assessed, so what is going to be the next step? You will of course want to get into the details around that. And you'll also try to mitigate that as the management of the entity. Right? But that's something you can say is a process of any organization. And particularly when you talk about governance mechanism, if let's suppose you look at some of the entities which have got good governance mechanism, you find this setup there. Yeah. Now, for the management to ensure that this process around the risk framework, around the controls which the management has set up, as to whether this entire process is working in an effective manner or not. What are the ways management can get that checked? Because if let's suppose we talk about something which has been established, so the management has already established that as a process. But just by having that process, does it really achieve any purpose for the entity? Answer may be no. Yeah, so that's why what do you need? That's why you will need some mechanism through which you can go and check, right? At times means whether that is working in an effective manner or even if that particular process or that particular control exists or not. Now that is where the role of the internal audit comes into the picture. Why? Because you can say it's a function through which management will try to check as to whether this risk framework which has been set up and the controls which have been put in place Okay, or to check at the first place whether the controls have been put in place or not. And if let's suppose the controls have been put in place, then whether those controls are working in an effective manner or not. Yes or no? No, that is a very important part for an entity to look at. And that is where internal audit, or you can say the role of internal auditor, comes into the picture. So what is the definition of the internal audit? So if you look at this definition of the internal audit, so how do we define this? So we can say internal audit provides independent assurance. Okay, so we'll talk about this independent assurance in a while, on the effectiveness of internal controls. Internal controls are what? These are the controls of the organization. Okay. And the risk management process. And why is this required? For the governance mechanism which has been put in place, right? Because that's what the entity would have set up. That's what the entity must have worked on. So whether that is working in an effective manner or not. Plus, if the entity will be able to get this set up and get this running in an effective manner, so what will happen? The objectives of the organization, they will be able to achieve that, or you can say this is the process, or you can say it's a part of the process for the entity through which they can get onto those objectives. Yeah, or you can say the functioning needs to be ensured as to whether that is effective in an that is working in an effective manner or not, right? So that's what we can say is all about internal audit, as to what this internal audit really means. Now, there are a lot of activities as around this internal audit, which an internal auditor will perform. So as you can just see on the screen as well, when you talk about monitoring of internal controls, when you talk about examination of financial and operating information, review of operating activities, review of compliance with laws and regulations, risk management, governance, all of these are what? All of these are nothing but those functions which the internal auditor may have to look into. Yeah. So now, as regards this internal audit, now another question arises before we get on to the details of the internal audit, as to whether this internal audit is mandatory for every company. Okay. So now, there's a criteria which the Companies Act has defined. So that means each and every company need not have internal audit. So if of course a company wants to have the internal audit, they can always have that in place. But is it mandatory by the law? Not for every company. Yeah, so there's a criteria which is prescribed. Now, what is the criteria? So let's look at this criteria quickly. So every listed company needs to have this in place. So when you talk about unlisted companies, so there again you can have two categories, whether it's a public company or private company. Okay. Now for a public company, we have this criteria in relation to the share capital, which has to be 50 crore or more, turnover 200 crore or more, outstanding loans or borrowings exceeding 100 crore or more, right? But this aspect, when you talk about loans and borrowings, this is required to be checked at any point of time during the year. Okay, so this is not something that you will check at the year end only. Now that's a catch. Huh? That's a very, very important consideration. Next, outstanding deposits. If let's suppose that is 25 crore or more. Again, this is something you will check at any point of time during the preceding financial year. Okay, now, when you talk about a private company, let's suppose as against this public company, if let's suppose the company happens to be a private company, means it's a private limited company. So do we have this internal audit mandatory? Yes, provided this criteria is met. Now, what is the criteria? Any of this. Now, please remember that when we talk about these criterias, so if any of this becomes applicable, or you can say if the entity falls within any of these, so this is not and, if any of this is something which is met by the entity, internal audit becomes mandatory. Now, for a private company, what do you have? Turnover of 200 crore rupees or more. Or here again, outstanding loans or borrowings exceeding 100 crore. There again, you will check this at any point of time. Now, please remember, for a private limited company, we have this limited criteria. Yeah, because the nature of the organization, the setup of the organization is such that it's not been made mandatory for more companies. Why? Because the setup is such. When it comes to the public company, of course, the public interest gets involved as compared to a private company. So that's why you have this lesser coverage of private companies in relation to the internal audit as compared to the part that you will see in case of public companies. And of course, for the listed company, you don't have any criteria. The moment you say the company is listed, this internal audit becomes mandatory, right? Now, moving further. Now the next question arises around the appointment of the internal auditor and who can be the internal auditor. So let's try to understand this aspect. Okay, so now what I'll do is I'll just share one working file. Okay, now talking about internal auditor. Now, unlike statutory audit, now I'm comparing this because at times you may have confusion around the internal audit. Okay, so that's why this comparison helps. Internal auditor, when you look at it from the perspective of the entity, from the perspective of the management, you can look at it in two ways. Okay, now what is that? Say for a company, let's suppose the company is ABC Limited. Is it mandatory that the internal auditor has to be a chartered accountant and in practice? Answer is no. Okay, so as far as internal audit is concerned, you don't have this mandate. Okay, now further on this, it can be a body corporate also, because you do not have all those sort of restrictions which you have in case of statutory audit. Yeah, so that's why you can have any type of entity. Of course, as a company, what do? You'll always check the competence of the internal auditor before you appoint that. Correct. So having the competence as regards the internal audit, when you talk about the criteria, so that criteria is not similar to what you see in case of statutory audit. Further, internal auditor can again be of two types. Now, this aspect is important and there is a confusion at times as around this aspect. Now, let's try to understand what do we mean by this. Okay, because at times there are some conflicting interests which may arise due to this. Let's suppose if this company wants to appoint an internal auditor, what can they do? They can go outside the organization, means they can go and appoint a third party. Okay, for example, say they have appointed PQR and company for the purposes of their internal auditor. So in this case, what will happen? You will say this is an external entity or it's an external party. Yeah, so it's not part of the organization. Correct. So that's why we call it as external, something that you'll also see in case of stat audit. Yeah, so stat auditor is not a part of the organization. Yes or no? Yeah. So something you can say which is not a part of the entity. Now, sometimes what you also see in case of, for example, large companies in particular, an organization may create its internal department, means it's a part of the organization, which will perform the internal audit function for that organization. Okay. So let's suppose this company has a department. What is the name of that department? Internal audit department. Okay, so that's the name of the department. Now, what is the role of this department? So, what do they do? They will do all of those things which an internal auditor is required. But in this case, can we say that the people who are there in the department, in this internal audit department, they are external to the entity? Answer is no. Yeah. So they are all what? They are all very much a part of the organization. Correct. Yeah. So they are all internal to the organization. And at times, what do you find? Now, this is something which is very commonly seen, particularly in case of large size companies. So, what do you find therein? That the entity will always have this internal audit department. I'm talking about the large size companies. Huh? Again, there's no criteria as such, but that's something which is commonly seen across the large setups. And along with this internal audit department, entity will also engage external parties. Okay, now it's not about the duplication, or it's not about that roles and responsibilities are different. So it's all about getting the support. Let's suppose if they believe that the internal audit department of theirs is of course competent, but they do not have the bandwidth, let's suppose, or they require some sort of expertise in relation to a particular area, which let's suppose some of the employees who are there in the internal audit department may not have. Yeah, so it could be any purpose because of which an entity may have both these things. Yeah. So idea is again not to overdo or not to overlap or not to get into any sort of duplication, but to achieve the objectives of the organization, to achieve the objectives of the internal audit in an effective manner. Okay, so that's what you also see. Now, can we say that an entity should have any preference as far as the internal audit is concerned, that they should always prefer to have the internal audit department, or maybe it shouldn't really be in-house, it should always be external? No. Okay, so again, it depends on the organization, its size, its policies, procedures, its functioning. Okay, so it all comes down to the entity for them to decide. What is the core aspect? The main aspect we can say is to ensure that the function of internal audit is carried out in an effective manner, whichever way the entity is able to achieve that. Okay, now let's suppose this company ABC Limited happens to be an entity which doesn't have the mandate from the company's end. Okay, so let's suppose if you look at the mandate, let's suppose it's not mandatory on the company to have the internal audit. So does it mean that the company may not get the internal audit done? Answer is no. Again, it's up to the company. Okay. Now it's up to the company. If let's suppose for better governance, even if it's not mandatory, and in fact, it should always be preferred. Why? Because by having this type of function or this type of setup, what will happen? Entity will be able to ensure if let's suppose there are any sort of gaps, those gaps can be plugged. in relation to any of the processes or any of the activities, right? So that's where we can say internal audit plays a very important role. Yeah. Now, as around the internal audit, a couple of things are important. Now, so far, on the basis of our discussion, we may be thinking that, okay, so when you talk about internal audit, so we can say, of course, internal audit will have a different role to play, but it appears as if it's a compliance. Yeah, similar to what you see in case of statutory audit. So it appears as if internal audit is also a mandatory thing, so entity will have to get it done. So it's again compliance on the part of the organization. So let's try to understand this aspect because this is very, very important. See, when we talk about internal audit, yeah, now can we say that in terms of the internal audit, it's something which is in the nature of a compliance to a certain extent? There's no doubt. Yes, it's a kind of compliance. But is it only limited to compliance? Answer is no. Let's understand that. See, when it comes to internal audit, now role of the internal audit, first of all, is not really limited to the finance or the financial statements, unlike statutory audit. Okay. Now, unlike statutory audit, what the internal auditor will do is internal auditor will be looking at, again, depending on the scope of the internal auditor, all the aspects, or you can say any process of the organization, whether that is in respect of finance or not, right? So that's one part which is important to be understood. So if let's suppose we look at the operations of the entity, so can we say that when you talk about the operations of the entity, so this has got anything to do with the financial statements? We are not really talking about financial statements here. Okay. So when it comes to the internal audit, its scoping is quite wide. It's not really limited to the financial statements or anything which is only impacting the financial statements. Yeah. So anything which is there in the organization, whether that is impacting the, or you can say, let me just say, any other process of the organization, right? Now, by looking at this aspect that internal audit is not really limited to the financial statements or the financial aspects, or you can say the financial controls. It's also the non-financial controls, which the internal auditor will be looking at. Okay, so that's where, what do you want from the internal auditor as a management? Actually, you are not only looking at the review. Okay, so now when you talk about internal audit, we are not only talking about the review, we are also talking about anything which is required to be improved upon. So, for example, an entity has appointed an internal auditor. internal auditor has looked at the process. Means, of course, reviewed, they have examined the process and they come across some problems. Okay. So now, as an auditor, what do you do? If you review, you'll have some observations. Let's suppose if you review, you'll have some observations. And if you have some observations, what do? You report them. Right? So this is something you will think of in respect of internal audit. Yeah. But when we talk about internal audit, the role of the internal auditor is not really limited to review or the examination or the verification or to find the gaps. See, internal auditor is also required to ensure that any such gaps which exist, they are also fixed. Means they are taken care of. Any improvement which is required, who will suggest that? That is also suggested by the internal auditor as to how that particular process, how that particular activity can be improved upon. If there are some gaps, how those gaps can be fixed. Okay. So you can say the role of the internal auditor goes beyond the review. So it's also about ensuring that the improvements are there. So something that you call as value addition is what you will expect from the internal auditor. If let's suppose the internal auditor comes, review and provide the observation, does it really help? Answer is no. And that's where you do not have the function. Okay, this is not the role of the internal auditor to only report on those aspects. Further, if let's suppose internal auditor has looked at a process which has got some gaps, so what will happen? Internal auditor will go discuss with the management. In fact, this entire process of the internal audit will talk about step by step. But quickly to get on to the roles and responsibilities, and particularly this aspect which is very, very important for the internal auditor, happens to be the fact that once that suggestion is provided, whether that's been implemented by the company or not. So what will the internal auditor do? Internal auditor will get on to a discussion, will get on to a planning with the management to ensure those gaps are fixed, for which a time plan should also be set up. Okay, so there should also be a time plan for the same, right? And within this time plan, what will the internal auditor do? Internal auditor will ensure that the improvement is going on. So somebody will be assigned from the management side to work on any of the gaps. And once the management or maybe the responsible person confirms that anything that was required to be done has been put into place, so what will the internal auditor do? There will also be a follow-up. So the internal auditor will be required to follow up in terms of checking whether the gap continues to exist or not. Okay, because that's what the internal auditor is there for. Yeah. So now this part is very, very important when it comes to the internal auditor, that this is not really limited to the reporting. It's also about ensuring that any problem which exists, any gaps which are there, they are also worked upon by the management. And eventually, when that is done, that is also again reviewed by the internal auditor. It may not be done within the same cycle. Okay, maybe they have set up a time frame. Maybe they have set up the cycles. Okay, cycles in the sense, maybe within a particular financial year, they may be thinking that these are the areas we'll cover. Let's suppose for the first 6 months, the audit which they have performed, the next 6 months, the timeline which the management has taken, then eventually that is followed upon by the internal auditor and ensure that the gap has been taken care of. Okay, so this follow up becomes important because without the follow up, what will happen? Will the internal auditor be able to ensure that the gap has been fixed? Answer is no. So does it really help the purpose? Answer is no. So that's why over and above the gap, this improvement is required to be looked at, followed upon, and then reviewed again as to whether the improvement is there or not. Means its implementation part is also required to be looked upon by the internal auditor. Right? So that's where we can say that when you talk about internal auditor, so it's not only compliance actually. So we can say that in a way, internal auditor is also playing a role of what? You can say it's an extended arm of the management. Yes or no? It's an extended arm of the management. In respect of what? In respect of those functions, in respect of ensuring the risk management setup, in respect of ensuring that the controls are in place. Yeah, so all of those aspects, you can say management may not be able to do on their own. So that's why what do? They have this function, they have this department, whether internal or external, who will be helping the management. So that's why it's very much a part of the organization. Whether it is internal or external doesn't really matter. Okay. Now with the understanding around the internal audit that we have obtained, another question may arise. Yeah. So let's try to look at that aspect which gets linked to this part. Now, as around the internal audit, as we discussed, that internal audit could be an external party, okay, could be a part of the organization itself, means an employee of the company can become the internal auditor. Yeah. And that's why one aspect which becomes important for the internal auditor will be what? Will be to ensure independence. Okay. So remember when we talked about internal auditor. Now, what are the functions which the internal auditor is going to play? So let's look at this. So internal auditor will be reviewing the controls, compliance with the policies and procedures, anything around the organizational structure which needs to be looked at, reviewed, okay, so that the entity is able to achieve its objectives. You can say internal auditor in a way also happens to be this custodian and the safeguard for the assets of the entity. So, okay, so all of these roles with the governance is required to play. You can say these are some of the roles which will be assigned to the internal auditor. Right? So now, talking about this aspect, now let me just move on to this part which becomes important and linked to this. And what is that? Independence of the internal auditor. See, for any review function, what do you need? Integrity, objectivity, and independent. Yeah, because if let's suppose an auditor has to go and review, so it has to be the one person who is independent of that entire setup. Otherwise, what will happen? If let's suppose there's a bias, if let's suppose there is any sort of influence, will the internal auditor be able to play its role in an effective manner? Answer is no. Internal auditor may not be able to get onto that aspect in an effective manner. That and that will lead to the problems. Yeah, because overall objectives may not be achieved. Yeah, so that's why it's very, very important for the internal auditor to ensure that independence is there. That's the most aspect. You can say that's the fundamental thing to the internal audit. Okay, now looking at the way internal audit is required to be appointed, particularly the one which is a part of the organization. Okay, now that is where a problem may arise. Because if you think about it from the organization's perspective, so you have a company wherein you have an internal audit department. So you can say internal auditor is in a way employee of the company. Now, for an employee of the company to go and review various functions and to remain independent, to be in a situation wherein any sort of influence is not there, now that becomes a very, very important aspect. Why? Because if that independence is not there, the problems in terms of execution of this function may arise. Okay. So that's why whenever you talk about this internal audit department, so how should this be structured? This should be structured in a manner that this department or the employees of the department are eventually not reporting to the other departments who are subject to the review of the internal audit department. Yes or no? Yes or no? Because otherwise, just think about it practically. So will it be possible for the internal auditor to play that role in an effective manner? Answer is no, because the internal auditor will always be under some sort of bias or maybe some sort of influence. Yeah. So that's why this aspect becomes very important. And at times this can be conflicting also. So practically, if you look at it, these situations do arise. That's why this overall structuring of the internal audit department plays a very important role, right? Now, to say that internal audit department could be a part of the organization is acceptable. Okay, that's allowed also. But for its functioning, it's important that it's been structured in a proper manner. Right now, see, when we talk about internal auditor, okay, so actually we are talking about what? It's an audit. Yes or no? Means the internal auditor will go and examine something in a very simple manner. So if let's suppose any person happens to be an auditor in relation to anything, huh? So you may also relate to some of the aspects related to statutory auditor here. Doesn't matter, because idea is to get into that part in terms of the qualities. So let's suppose there's a department which is involved in a particular process. Let's suppose if you talk about procurement function. Okay. Now procurement function will have a lot of employees who will be working on various activities related to procurement. They will have their standardized set of activities, controls which they are required to look into. The way the functioning is going on, they will be quite familiar with that, because what are they doing? They are doing that activity in a day in, day out manner. Now let's think about it from the perspective of the internal auditor. Internal auditor is not only going to look at the procurement. Internal auditor may also be looking at the sales function, may also be looking at the financial reporting requirements, may also be looking at the compliance of laws and regulations. And the laws and regulations applicable to different set of industries could be quite different, could be quite wide. Now in such a situation, for an auditor to go and check, let's suppose some of the things which are there in the procurement function, can the auditor do that? Answer is yes, auditor can do that. Will that be a problem? May not be, because if the auditor has an understanding, so the auditor can always go and check that. If let's suppose while checking there are some gaps, will the auditor be able to suggest that as to how do you improve? Now that's where this expertise comes into the picture. So what do you mean by that? See, the internal auditor is not only required to review. Now, this is a very important part. Its role is quite different. It's quite wide. They are going to help improving that particular process. Even if the process is working in an effective manner, if anything is further required through which it can be improved upon, who is going to look at it? Internal auditor. Okay. So just by having a working knowledge in respect of something which the internal auditor is going to check, will that help him? Answer is no. That is not going to help the internal auditor. Yes or no? So that's why, what should the internal auditor do? A thorough understanding and an expert knowledge in respect of those areas which are required to be audited becomes essential on the part of the internal auditor. Okay, because if that is not in place, if let's suppose the internal auditor doesn't have that, yeah, so will the auditor be able to suggest the improvements? Answer is no. Answer is no. And when you talk about internal auditor, so we are saying the role of the internal auditor is quite wide. Yeah. So that's where, if you look at it practically, so we are not saying that each and every function or each and every area will be looked at by only one person. Of course, when you talk about this internal audit function or maybe the internal audit team, whatever be the case, that will also comprise of various persons who may be expert in respect of different areas. So that's how you will see the composition, okay, which of course the management will evaluate before appointing them, whether internally or externally. But that part becomes essential in respect of the internal auditor, because if that is not in place, then of course some part of the review can be completed. Of course, the internal auditor may also reach a stage wherein he is able to find the gaps, maybe the errors, maybe any sort of non-compliances. But to get on to the stage wherein the improvements are required to be looked at, that is only possible when the expert knowledge is in place. Yeah. Now, this is again quite wide. Why? Because let's suppose if the internal auditor is looking at the accounting and finance, so he needs to have that understanding. If let's suppose he is looking into the operations, like we discussed, procurement, so that knowledge is required. Yeah. So maybe there is any other technical aspect. It could be anything. Huh? It could be related to maybe the technical setup. Okay, it may be related to, let's suppose, the IT system of the organization. Yeah, it may be related to control system for any function of the organization. Yeah, so all of these things become important on the part of the internal auditor. Next, now this is something which is, I would say, quite common for the internal auditor, and that is about confidentiality. Now, what do you mean by confidentiality? See, confidentiality, you can say, is one stage in a way wherein the internal auditor has access to, excuse me, lot of information of the organization. Yes or no? Of course, the internal auditor will have great insights about various things. He will be having the access to a lot of information. And all of this information becomes confidential. So that's why to maintain that confidentiality with the outside world becomes the responsibility of the internal auditor. Yeah, because if that is not done, if that information is shared all across, then it will not be appropriate. Yeah. So you can say it will be a breach of trust between the entity and the auditor. Next, and another very important aspect around the internal auditor happens to be the, you can say, the skill set related to people management. Now, what do you mean by that? Okay, now let's try to understand this. So, what do you mean by this people management in a way? Okay, now let's try to understand the way any internal auditor will function. It doesn't really matter whether it is internal or external. So let's suppose we are talking about a company, say ABC Limited. Okay. And we have the internal auditor PQR and company. Now in this case, what will happen? When the internal auditor is performing the internal audit. So let's try to understand as to how that internal audit will be performed. People from two sides need to interact. Yes or no? So what will happen? There will be a team of the company and there will be a team of the internal auditor, which will be deputed on the job. So let's suppose if you talk about this procurement function again, let's suppose there are few people from the procurement team who are providing the information, who are providing the relevant documents or maybe the required documents to the internal auditor. Okay, now for an internal auditor, first of all, what is required? Internal auditor will require to obtain an understanding. Yes or no? Because before you go and audit, what do you need? You need to have the understanding, correct? So without the understanding, will that be of any use? Answer is no. And further on the top of it, internal auditor will also require to have a lot of information, various documents. So the internal audit team needs to, or you can say they will be interacting with the client personnel. Yeah. So now for this process to function in an effective manner, now what is important? Internal auditor needs to manage the team of the company, of the client, so that the required information is obtained, required information is checked, and later on, if there are any gaps, those are also communicated in an appropriate manner to the internal auditor. And if let's suppose internal auditor has observed some gaps, internal auditor can communicate that to the management. And they can just sit together, work upon that as to how this particular area can be improved upon. Yes or no? So you can say that people from this internal audit side will be interacting with the people from the company's side. Yes or no? Yeah. And that is where the skill set related to handling of the client personnel becomes important. Yeah, because at times there could be challenges in providing the information. Maybe the client personnel is not supportive. Maybe they are not supportive in terms of providing the information. Maybe they may be uh, sort of skeptical in terms of, or maybe they be reserved in terms of not sharing a particular set of information with the internal auditor. So that's where this skill set of handling the people, and eventually, if let's suppose there are some issues which the auditor has observed, yeah, how do you communicate that? How do you communicate in an effective manner so that that is also accepted by the management, accepted by the client personnel, and basis which you can work on a mechanism through which this entire process can be improved upon, becomes a very important skill set. Yeah. So how do you achieve that? Only and only when the internal auditor will have the skill set in relation to handling of the client personnel. Because if that is not done, there can be disputes. Okay. And at times, because the nature of the project could be such, and particularly it's not only about executing the work, it's also about executing the work in a particular time manner, wherein a lot of pressures could be there, both on the part of the internal auditor as well as the company, or you can say the client personnel. Okay, so that is where this skill set becomes important on the part of the internal auditor. Right now, let's try to understand as to what are going to be the steps in terms of any internal audit. Here again, what we can do is we can relate to some of those parts, okay, or some of those aspects which we see in case of stat audit also. Why I'm just referring to the statutory audit time and again? Because you get to see a lot of similarities in terms of the statutory audit, the way this entire approach is looked at. Okay, now that's why we are just trying to look into that aspect. Now, talking about various steps. So let's look at those steps. Just give me a minute. I'll again share the working file. Now, for an internal audit, what's going to be the first step? Now we are talking about an audit, correct? So if let's suppose you were to audit something, what do you need to begin with? You will always need an understanding of the process. Because if you do not understand the process, can you even think about the audit procedures? Answer is no. Yes or no? So that's why to understand the entity, to understand the organization, to understand the industry, and of course, to understand various processes which are there, becomes the most important part. And that's what you'll always want to start with. Okay. Now, once the understanding is obtained, what do you do? So you can say that will become the basis for the internal auditor to plan various set of activities. In relation to what? In relation to everything. Okay. So that's what we can also say is all about drafting of the audit plan. In fact, this understanding in a way is nothing but a part of planning only. Yes or no? Yeah. It's also a part of the planning. So it's not different from the planning of the audit. But once you understand, that's how you will decide. So what do you decide? You will decide first of all the composition of the team, size of the team that you will want to deport. Why? Because the team that you'll depute, that will again be dependent on various factors. What is the complexity involved? What is the volume in relation to a particular process, in relation to a particular area? What is the skill set that you require from the team personnel? So all of these things, at times, because it's a recurring engagement, you can say it's a repeated thing, an auditor may have that insights. But even then, the auditor will always want to ensure that the understanding is updated. Okay. So it's not only about obtaining the understanding at the first place. It may also be about updating the understanding of the process. So both the things are required to be looked at. Correct. Now, once the plan is in place in relation to the team composition and various aspects, so what will the internal auditor do? Think about the procedures. Yeah, because if let's suppose you go and audit, so you'll also be talking about the procedures. Yeah, it's similar to any other examination or any other verification you'll do. Yeah, so what are going to be the set of procedures? What are going to be the focus areas? What are going to be the areas where you not want to focus upon? Okay, what are the challenges which are involved? Yeah, so all these things become important. Some of those aspects related to materiality, some of those factors. Will you think that all those aspects should be considered by the auditor even in this situation? Answer is yes. That should also be considered by the auditor in this scenario as well. And of course, once this planning is done, wherein the auditor has looked at various aspects, formed the team, they have had various discussions with the management, they have had various discussions internally, they have also allocated the areas, they have also identified what is really significant to them, what is not really significant to them. What do they do? Where do they go next? They will now perform the procedures. Yes or no? As a next step, what do? They will now start performing the procedures. Right? So that is something which you call as execution also. Yes or no? So in a way, we are talking about execution. On the field, the team will go perform the procedures, look at various areas, what is required to be done. Yeah, all those considerations will they will get into this at this stage. Now, when it comes to the internal audit, let's also think about some of the things that you'll see in case of stat audit. So let's suppose the internal auditor has picked up an area. So they are planning to audit something. So does it mean that internal auditor will do 100% checking? Answer is again no. Okay. Here again, the approach is going to be what? Sample based. Yeah. So this approach again will be what? You can say this again will be sample based. Why so? See, when we talk about internal audit in today's times, so what is the concept that we have? We have the concept wherein the internal auditor will have a lot of things to be done. Okay. It's similar to any other person. So today, every person you'll say has got a lot of things to be done. So now what do? You'll prioritize. Or you can say you will now want to focus on something which is more important. And that's where we can say we have this concept called as, sorry, we have this concept called as risk-based internal audit. So when you talk about internal audit, so basically what are you on to? You are on to audit of those areas wherein the risk is more. Okay, wherein the risk is more. So that's why, as a part of this planning, as a part of the procedures, auditor will do what? Auditor will do risk assessment. Okay, to identify what has got more risk, and something which has got more risk is going to be the area wherein the auditor is going to focus more. So does it mean those areas wherein the risk is less? So auditor can take a call to ignore that completely? Generally, no. So in respect of those areas wherein the risk is lower, so of course the auditor may want to cut down on the procedures, may want to cut down on the extent of testing, but to say that the auditor will ignore that altogether may not be the right approach. Okay, that may not be the right approach. Why? Because even if that is perceived to be less risky, you never know, some of the gaps or some of the problems may exist therein. Okay, so that's why it becomes important for the internal auditor to ensure this approach of risk based, first of all, wherein the auditor is focusing more on the risky areas, which the auditor will go and assess, and of course perform certain procedures, or maybe get on to with a lower extent of testing or lesser risky areas. Correct. Now with this, we'll come back to this concept around the sample. So you can say all those considerations of sampling, will you have that in case of internal audit also? Answer is yes. You will have that in case of internal audit also. Why? Because here again the auditor will decide what is going to be the population, of course. And in terms of the population, what is the sample auditor will want to pick upon? Yeah, so the sampling methodology which the auditor will want to do, number of samples which the auditor will want to pick upon, all of these things, where will the auditor discuss? At this stage of audit planning. Yes, which will eventually be executed. Yes or no? Which will eventually be executed. Right? So that's why when it comes to the internal audit, now please understand, similar to the approach you will consider in case of stat audit. Here again, you are not doing 100% testing. In fact, to do this 100% testing is not practically possible. Now, when you talk about this internal audit in particular, so therein one consideration may arise. So let's talk about that. Now, what is that consideration which may arise? So we may say that when you talk about this internal audit in today's times, particularly, there's a lot of data which the internal auditor will be required to process, will be required to, of course, understand and then perform the procedures on. See, with the technology which is in place for quite some time now, in the way that technology is improving, there are a lot of tools, or you can say there are a lot of technology based tools which the auditor these days make use of to perform the audit. So let's think about, say, for example, a very large size company which has a huge volume. Let's think about a bank, for example. Okay, the number of transactions you'll see, it's quite voluminous. Yes or no? Now, for an auditor to go and audit something manually, Do you think it is practically possible? Answer may be no. And in fact, there are a lot of systems of the organization these days which are automated. The controls are automated. So till the time you don't perform the testing of those controls, will you be able to get the comfort? Answer is no. And that's what the internal auditor is going to go there. Yeah. So how do you achieve that? That's where the usage of the tools, various tools which are available, an auditor will generally make use of. Okay. Particularly when you look at it from the perspective sampling approach. Okay. So there are a lot of sampling calculators, tools, basis which this entire data is required to be processed. And with this AI, the way the things are evolving. Okay. So in fact, practically what you will get to see, practically this sampling approach may go altogether. Because if let's suppose you have this tool which is able to process the entire data for you and come up with an output. Yeah, so end up looking at the entire population. But does it mean that this is really required to be done? No, we are not saying that. But practically, of course, you will get into that situation also. And at times you see that happening also. Right? Now, once this execution is completed, now let's move on to that stage. Say the execution is completed, procedures are performed. Now, where do you go? Auditor will draw conclusions. Auditor may have some observations. In relation to the observations which are there, auditor may also have some suggestions. Any improvements which are required to be done. Correct? Now, all of these things will first of all be communicated by the internal auditor to the management. Now, if you go back to our example of the procurement function, see the internal audit team has done the audit. Now they are coming up with some observations. They have some points for the consideration of that particular function. So what do? Do they just go and put that in their report and issue the formal report? Answer is no. First of all of that thing is communicated to the relevant function, or maybe you can say the management. Yes or no? So you can say it's all communicated as well as discussed. So it's not a one-way communication. It's all discussed with the management. Once you do that, what may happen? Maybe there are some gaps in the understanding of the internal auditor. So those may be bridged. Yeah. So those may be bridged. Maybe some of the observations may go away. Maybe some of the additional points may have to be looked into. Yeah. So that's why you can say the way this communication is required to be done, internal auditor will be giving a kind of draft report for the comments of the management, for their responses on which the management will be working upon. Of course, there will be a time frame for the entire process for getting into all of these aspects. Once that is done, once the management responses are obtained, okay, now, so this is given for the management responses. Now, once the management responses are obtained, that is where the internal auditor will get on to finalizing the draft report. So let me just call this stage as a draft report. Yeah. So after this draft report, where do we go? internal auditor will move into issuance of final report. So does it mean that we are through once the final report is issued? Answer is no. Why? Because when it comes to the final report of the internal auditor, now this part plays a very, very important role. Let's try to understand that. So in the report which the internal auditor will issue, what do you include? So we'll also try to understand the components in a way of the report of the internal audit. Generally, you will see it will start with an executive summary. Why? Because a report may be running into hundreds of pages at times. Okay, so maybe if somebody wants to take a quick glimpse of what all things are there, and there's generally something that you call as heat map as well. So what do you call as heat map? So you can say a categorization, something which is critical, maybe marked as red. Something which is not so critical, you can say it's medium in terms of the observations. Okay. And then you have this third category, which is, you can say, is of lower impact. Of course, the gap is there, but it is not quite significant. Okay. Now, basis this, if let's suppose the senior management, if let's suppose the governance function wants to get on to this quickly, so they will be able to do that. And then of course you have this detailed discussion in respect of each and every area. So when you talk about detailed discussion, so what do you have there? So in terms of detailed discussion, internal auditor will talk about the understanding. Okay, what is really required to be done? Yeah, so what should have been done? So what was should be? If there are any gaps, and of course, suggestions. How do we improve that? There has to be a timeline for this. Yeah, so to say that this is suggested doesn't really help. There has to be a time frame within this needs to be, sorry, within this, that particular point needs to be implemented. So that's why there should also be a mapping. Yeah, there should also be mapping of the management personnel, or you can say the team that is going to work upon that. Right? Work upon what? Work upon improvement of that particular process. Okay. So that there is somebody who is responsible from the management side and who is also going to be accountable. Why? Because the objective was what? Can we say our objective was to find the gaps? No. Our objective was what? Our objective was to get on to the improvement. And can we say that we can just theoretically put down the improvements on the piece of paper? Answer is no. These improvements need to be put in place. So the implementation part requires a proper timeline, requires somebody who can be held accountable. On the top of it, another very important part happens to be what? Say, if the management tomorrow comes up with the improvement, okay, whether that improvement is actually done or not, who will check that? Because if let's suppose a particular activity is assigned to a person, he may say yes, that this was required to be done and I've done this, but how do you really ensure whether that's been done or not? Because this may have been required earlier also, maybe that time it was not implemented. So that's where another very important role requires follow. And who will do the follow-up? So this follow-up needs to be done by the internal auditor. Okay, wherein the internal auditor will again go and check whether this suggestion is now implemented or not. Okay, because if that is implemented, it's very good. That's the objective. But if somehow that is not implemented, then it will be considered to be a serious gap. Why? Because if, let's suppose, the problem was not identified, you can say something which was unknown. But when you know the issue is there, when you know that personnel is also assigned to resolve that issue, to ensure that something is implemented so that this issue doesn't arise, but still nothing has been done on that, then it may reflect serious gaps in terms of the way the organization is actually functioning. Okay, something that you'll call as procedural gap, which is always considered to be very, very serious. Yeah, which is always red flagged and something that will always be escalated upon, something that will always be reported upon. Okay, so something that you call as critical. Yeah, so this will automatically become critical. Why? Because it's a process gap. So there's a difference between a transaction gap and a process gap. So within a process, it may have happened that there are a lot of transactions, and some of the transactions, some of the activities may have gone wrong. Yeah, because at the end of the day, maybe the human are involved, so there are bound to be errors. But something which is repeated, what does it reflect? There's a procedural gap. There's a gap in the process. That should be a matter of concern for the organization. That is where the organization needs to work significantly so that it is improved upon. Right? So that's why we can say that this follow-up becomes very, very. Yeah. So does it mean that this follow-up will always be immediate? No. So there again, when you talk about the timeline, okay, so this timeline will talk about everything. Huh? So this timeline will talk about as to when this is required to be implemented. And of course, after that, this follow-up will happen, which will again then be reported upon by the internal auditor to the management. Yeah, because that's what really the objective of the internal audit is. Idea is not to remain limited on the gap. Idea is what? Idea is to reach this stage and to ensure that this gap is fixed forever. This problem is resolved forever. Understood? Yeah. So now what we will do is we'll just talk about some of the things which we see in case of, you can say, internal audit vis-a-vis statutory audit. Okay, something that we call as external audit mostly. Now, by this internal audit, please don't get confused. As we have discussed, internal audit could be an external party or an internal party. So something you may call it as internal auditor or external internal auditor. By external auditor over here, when we are making this comparison, we are actually talking about the statutory auditor. Okay, so that's how we are looking into this, right? So now, let's look at some aspects. Now, when it comes to the internal audit, so who is performing that? As we discussed, it could be very much a part of the organization, means its own internal audit department, or it could be an external party which is engaged by the entity. When it comes to statutory audit, so it has to be external always. Yes or no? This can never be internal to the entity. So that's a Big difference. Now, when it comes to the statutory auditor, as we understand, statutory auditor is all limited to the financial statement. So anything which is revolving around financial statements, that's what the statutory auditor is looking into. But role of internal audit is wide. So it is actually revolving around the organization as a whole. So that's what we can say. Whether that is impacting the financial statements or not, doesn't matter. Again, the scoping has to be decided. So we are not saying that every time every internal auditor will be doing this. So who will decide this? Of course, the management will decide the scope as to what do they want to do, and maybe in terms of cycles, they may be getting all of these functions audited. Statutory auditor is appointed by the members of the company, but when it comes to the internal auditor, it's actually a responsibility of whom? Those charged with governance, means the board of directors. So they have this responsibility in respect of the functions which the internal auditor is going to play. So you can say, in a way, internal auditor is what? It's an extended arm of the management, or you can say governance mechanism. It's a part, right? So that's why it's appointed by whom? TCWG. Okay, wherever you have the audit committee, of course, audit committee, otherwise it's the board. Statutory auditor will issue the report to whom? To the members of the company. So it goes out to various stakeholders. But when it comes to the internal auditor, so therein there is a gap. This report of the internal auditor is actually limited to the organization. So it doesn't go out to the outside world. Okay, unlike the statutory auditor report, which is put down on the website of the company. Okay, so this doesn't go into the public domain as such. This can be referred to by some of the parties who are associated with the organization, for example, statutory auditor. But again, you can say it's something which is reserved. It's not something which is in the nature of a public document, which is free for all. Okay, now when it comes to the statutory auditor is there to provide an opinion around what? Truth and fairness of the financial statements. But when it comes to the internal audit, its role is wide, and its role is all about control mechanism, risk management framework, right? So that part is important. And basis the appointment, can the internal auditor be an employee of the company? Yes, of course. If that is an internal audit department, so that's nothing but an employee of the company. But do you have this similar sort of thing in case of external auditor or the statutory auditor? Answer is no. That's not possible. That's not you'll get to see in case of statutory auditor. Okay, now let's talk about the approach, or you can say, how do these two parties, means the statutory auditor and the internal auditor, sometimes they work together. See, for the purposes of statutory audit, the stat auditor may do is, you can say stat auditor can leverage. How do we achieve that? Let's suppose if I happen to be the statutory auditor, some of the areas which are looked at by internal auditor, they are going to help the statutory auditor. Why? Because if let's suppose there are some areas that we need to focus upon, yeah, so maybe inventory valuation is one piece which the statutory auditor believes is 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 something which is quite critical. Okay, there have been problems in the past. This needs to be worked upon by the management. So what do they do? At times, in respect of the scoping of the internal auditor, statutory auditor may also sit together with the management, or you can say the management may also take the inputs from the statutory auditor as to anything which is specifically required to be covered by the internal auditor, or maybe in respect of something that needs to be focused upon. By doing that, what will happen? Can we say that statutory auditor gets relieved from performing such procedures in respect of that particular area? Answer is no. See, the end responsibility for the statutory auditor cannot be passed upon. That will continue to remain with the statutory auditor only. By just doing this exercise, by just getting some of the things, by getting some of the things examined, if let's suppose internal auditor comes up with some observations, okay, or maybe comes up with an outcome that the things are working in an effective manner, that can always be referred upon by the statutory auditor. So that's how statutory auditor can leverage upon. Okay, so that's how he can just try to make use of the work of the internal auditor. And practically, if you look at the companies, practically, if you look at the scoping, generally what the management will do is management will discuss the scoping part, okay, with the statutory auditor. Statutory auditor and internal auditor may also sit together. They may also be working jointly. They may also be talking to each other, right? So this communication between these two can always help achieve the objectives, because eventually when you talk about statutory audit or internal audit, so why are these being performed? So that the objectives of the organization are achieved. Yes or no? Because eventually that is the goal. Eventually that is what the organization is working for, right? So that's where this entire aspect becomes important for both the parties to look into this, right? Clear? Now what we can do is, now alongside, we can pick up some questions around this, specifically on the internal audit piece. Okay, so just give me a minute. So what I'll do is I'll just pick up some questions, maybe first of all on the statutory audit. Sorry, on the internal audit part. Okay, now, all right, so now I'll just share this document with you. One of the independent directors sought information regarding the appointment of internal auditors for the following group companies in accordance with Companies Act, of which certain financial information is also given below. Now, what is that? Figures are in crore and they correspond to the previous year. So we are given information about 3 companies now, right? XYZ Limited, it's a listed company. And of course, we are given some information around their equity share capital, turnover, any loans which they will have from the bank or the financial institution, and of course, the public deposits. Remember, if you go back to the criteria of the applicability of the internal audit, I think that's where this information may have been put down. Next, M&M Limited. It's an unlisted public company. Okay. And then we have this GFG Limited. Let me just call it as GFG Private Limited. Okay. So this is unlisted private company, right? So here again, you have this information available. Now, in this case, you are required to evaluate as regards the appointment of the internal audit. I think it's more about the applicability. Yes or no? So we need to look into the applicability of the internal audit in this case, whether the internal audit will be applicable or not. Right now, let's get on to this. So first of all, how do you approach this in the exam? First of all, you should get on to the required criteria. Yes or no? Because the technical guidance which is available, first of all, you will put it down. What is the technical requirement for the internal audit to be in place? So we can say it's about every listed company, every unlisted company having some criteria. So this entire thing you'll put down, then every private company. So the same criteria that we talked about. Now, what do you do as a next step? Now you will use this technical literature. So you can say what is going to be your first part? To give the technical literature. And of course, the relevant technical literature. At times, what do? You put down a lot of information which may be irrelevant also. That is not really required. Just try to be relevant to what is the requirement of the question. Okay. Now, in the given case, if you look at the first company, this XYX, for a listed company, do we need to look at the capital or the turnover or some of these criteria? Answer is no. The moment you say it's listed, what will happen? Internal audit becomes applicable, right? So this company, therefore, is required to appoint internal audit. Why? Because it's listed. Very simply. So you are using this technical literature to conclude. Yes or no? So that's how you will be approaching this in the exam as well. Now, if you talk about the next company, M&M, it's unlisted public company. So therein you will check the criteria. This company is having 60 crore as equity share capital. Okay. Its equity share capital is 60 crore. Now, what is the criteria? Any unlisted public company, if their paid up share capital is 50 crore or more, so internal audit becomes mandatory. Now, in this case, do we need to look at all the other criteria? Excuse me. Answer is no. Why? Because we discussed, if any of this criteria is met, internal audit becomes applicable, right? But in the exam, if let's suppose any other criteria is also getting met, you should try to cover that aspect also, that basis this and this criteria, by applying either of these criterias, internal audit becomes applicable. Okay. Now here again, do we say internal audit is required? Yes. So this company will also be required to appoint. Next, GFG. Now therein the requirement is slightly diluted, right? Now, if you look at this company, its equity share capital is 70 crore, turnover is 180, 80 crore is the loan. And if you look at the criteria, all the limits, now if you go back to the private company, turnover should be 200 crore, loan should be 100 crore. Now, is this company meeting any of these criteria? Doesn't seem to be that, right? So all the limits for the company are below the prescribed limit. Right? So all the limits are below the prescribed limit. So therefore, what do you say? Therefore, this company will not be required to appoint the internal. Simple. Yeah, so that's why at the end, what should you do? You should summarize this in a way. Okay, that is always appropriate. So we can say it is concluded that out of these three, XYX, M&M, they are required to appoint, whereas GFG is not required to appoint the internal auditor. Yes or no? Clear? Yeah, everyone? Very good. So now let's look at one more. Rishi is appointed as internal auditor for SPUM Limited. That's the name of the company. So it's a medium-sized manufacturing company. Wherein CA Nitin is the statutory auditor. Okay, so Rishi is the internal auditor, Nitin is the statutory auditor. During the review, Rishi means the internal auditor notices several discrepancies in the disbursement records and suspects there might be weaknesses in the internal control system. Additionally, there have been recent changes in the company's business policies that he was not informed of. Okay, so that is also a sort of concern. So there have been recent changes he was not informed about. So you can say an understanding provided to him is not appropriate, okay, or not complete. Rishi is concerned about maintaining his independence and objectivity while ensuring that the management is aware of these issues. So in this case, what are the responsibilities of Rishi as an internal auditor with respect to accounting function and financial records of the organization? Okay, so let's talk about this part first, and then we'll move on to the second part. Now, when you say Rishi notices several discrepancies in the disbursement records, he is concerned about maintaining his independence and objectivity, knowingly that management is aware of these issues. So what are the responsibilities of the internal auditor? First, to ascertain adequacy of system of internal control. Yes or no? Yeah. By a continuous examination of accounting procedures, receipt and disbursements, and to provide adequate safeguards against the misappropriation of assets. To operate independently, very, very important, of the accounting staff, and must not in any way divest any of the responsibilities placed upon. Third, not to involve in the performance of executive functions. Why? Because this objectivity needs to be ensured. To observe the facts and situations and bring them to the notice of authorities who would otherwise never know them. So observation is required and reporting is also required. Yeah. And also critically appraise various policies of the management and draw its attention to any deficiencies. Okay, wherever these are required to be corrected. To associate closely with the management and to keep the knowledge up to date by being informed about all important occurrences and events affecting the business, as well as changes that are made in the business policies. Then, at all times, internal auditor must enjoy an independent status. Now, this is extremely important. So this is something which is always required to be looked at. Yeah. Now, moving on to the next part. Now, if you go back, so we had the CA Nitin as the statutory auditor and Rishi was the internal auditor. Now, CA Nitin, means the statutory auditor, asked the internal auditor to provide direct assistance to him regarding evaluating the appropriateness of management's use of going concern assumption. Okay, in respect of the financial statements to be audited. In view of the standards on auditing, whether Nitin can ask direct assistance, okay, whether the statutory auditor can ask the direct assistance from the internal auditor. Now that's the question. Okay, now if you look at the requirements of this auditing standard using the work of internal auditor, statutory auditor shall not use internal auditors to provide direct assistance to perform procedures that involve making judgments in the audit. Of course, yes. Yeah. Since external auditor, now please understand this term external auditor is used in relation to statutory audit. Okay. So that's how this has been differentiated. Since the external auditor has the sole responsibility for the audit opinion expressed, external auditor needs to make significant judgments in the audit engagement, right? Now, what are those significant judgments? So they would include assessing the risk of material misstatement, evaluating the sufficiency of tests performed, evaluating the appropriateness of management's use of going concern assumption, evaluating significant accounting estimates, evaluating the adequacy of disclosures in the financial statements. Yeah. So therefore, what do we say? CA Nitin, statutory auditor, cannot ask direct assistance from the internal auditors regarding evaluating the appropriateness of management's use of going concern assumption. Okay. Yeah. Clear on this? All right. So now I think what we can do is we can take a short break and then we'll continue. So Ashok, we can take a break now. Ashok, we can take a break now. Yeah, sure. looking at some more questions around the same. CA Sanjana has recently joined as Chief Internal Auditor of Upscale Limited. So it's a company which is listed. Her subordinate staff in the internal audit department now, it's the internal audit function, means in-house, right? Her subordinate staff brings to her knowledge about prior audit issues which were reported by the internal auditors, the previous team. Okay. The important point is those are still open. Does she have any responsibilities in this regard? So can we say that because it's something that there in the organization, but something which the previous auditors have looked at, and this audit team or maybe the head of the audit team is new to the organization, so she doesn't have any responsibility towards that. So what should be the approach which the internal audit head should have in place? Yeah, so now because she happens to be the chief internal auditor, means the head, so therefore she will have the responsibility for what? Continuous monitoring. So continuous monitoring is not only required for anything which is going to start now, something which is already in place. So when you talk about a process of the organization, it's already in place. Yes or no? So something which is already in place needs to be looked at by the auditor. And if let's suppose you talk about the observations which are still open, so this shows that the process of the organization is still going on full of errors. Yeah, which becomes very important to be fixed. Yeah, so closure of the prior audit issues through timely implementation of action plans becomes her responsibility. So for this, what do the internal auditor need? A formal monitoring process that's required. Okay, so of course they will have to have discussions with the relevant concerned, you can say, departments of the organization, something that you call as management here, and also the TCWG, again depending on the matters involved. Of course, if something is reported upon, that must be involving some of the critical issues as well. Now the responsibility to implement the action plans remains with the management. Why? Because who will actually do this? It has to be the management. Getting it done has to be through the audit side. So how do they get it done? They will monitor whether the management is implementing the same or not. Okay. You can say something which is also called as action taken report. Means the progress, whether the progress is there or not in respect to a particular action plan. The term monitoring and reporting here refers to periodic tracking and also the evaluation of corrective actions to resolve them, because that's the end objective. Resolution is the end objective. And after that, if at all something remains, of course, to report upon that. Okay, so therefore, the internal auditor would require what? Follow-up action as to whether that's been done or not. This is required to be reviewed. If nothing is done, within, of course, the agreed timelines. When you say reasonable timeline, that has to be the agreed timeline. She should also escalate that. Means bring it to the notice of the relevant teams. Generally, it's the relevant departments, which you call as management. If there is anything in terms of suggestions or the improvements, which is not done. So why that is not being done? Okay, because if you monitor that, you also get to know about it. That is again something which the internal auditor will have to think through. They will have to get into that. Where the management has accepted the recommendations of the internal auditor and also initiated the necessary action. Therein, will she have any role to play, or internal auditor will have any role to play? Yes. See, periodic review is required. Why? Because implementation of the same needs to be ensured. And how do you ensure that? When you review it. Once the management confirms that yes, they have implemented this, auditor will go and check it again. And they will not find the problem now, this time around. So that's how auditor will be able to ensure that yes, this has been put in place. This has been taken care of. Right? Okay. Now, moving further. STU and Associates, they are the statutory auditors of this listed company. Again, First and Last Limited. So that's the listed company. And this is operating in petrochemical industry for the past 3 years. CAK happens to be the partner, engagement partner. They designed certain substantive procedures on some assertions. Okay, basis the risk assessment they have had. They've, of course, think through some, you can say, audit procedures. Now, these assertions were not examined by the auditor in the previous years due to materiality, or you can say risk considerations. Right? Mr. X leads the internal audit department of the company. So we have Mr. K as the statutory auditor, Mr. X as the head of internal audit department. And of course, being a listed company, they will have this audit committee. So internal auditor will be reporting to the audit committee. So that's how they maintain this independence also. Now, during the audit, senior management of the engagement team decides to engage Mr. X to provide direct assistance in performing the above substantive procedures. Also indicate the activities to be performed by the statutory auditor prior to using internal auditor for providing direct assistance. So I think we have touched upon this aspect slightly in the previous example also. Now let's look at this. When you look at this auditing standard 610, it talks about determining the nature of work that may be assigned to the internal auditors. Okay. And therein, the external auditor needs to be careful to limit such work to those areas that would be appropriate to be assigned. Okay. So it's not something which is free for all. Right. So it has to be something which is restricted. So what are those activities, tasks that would be inappropriate? So that would include discussions of fraud risk, determination of unannounced audit procedures. So in the above case, what has happened? Engagement partner had designed certain substantive procedures and those assertions were not tested by him in the previous years. Why? That's the methodology they will have. You can say that's the strategy, or that was a part of plan of the audit team. So when they are doing this now, so what are they trying to achieve? They are trying to bring in an element of surprise in their audit approach. Yes or no? So that the individuals who are familiar with the company, okay, who are familiar with the audit procedures. Okay, so now they don't get to know about this particular procedure. So very much a part of the audit strategy an auditor may have in place. We are looking at it from the perspective of statutory audit right now. Now, therefore, considering the approach which the statutory auditor has taken, using an internal auditor to provide direct assistance could prove to be counterproductive and defeat the very purpose of designing such procedure. Yes or no? Because in a way you diluted that by having discussions, by disclosing that, by getting onto a situation wherein the element of surprise goes away. Okay. Hence, the decision of senior engagement team member to use Mr. X is not in accordance with SA 610. That is not proper. Now, prior to using the internal auditors to provide the direct assistance for the purposes of audit, what should the statutory auditor do? They need to have written agreement from authorized representative of entity that internal auditors will be allowed to follow the external auditors instructions. That has to be routed through the entity because statutory auditor and internal auditor are not directly engaged. So they are engaged through one common link. And what is that? Company. Okay. And when they engage, so the entity will not intervene. Otherwise, what will happen to the independence? Obtain written agreement from the internal auditors that they will keep the confidential specific matters restricted to them. Okay. And also inform the external auditor of any threat to their objectivity wherever they find that. Right. So that's something which is required to be looked at. Okay. Now, moving further. Next. Management of High Limited is concerned with the reporting requirement cast through Rule 11 of Companies Audit and Auditors Rules for the financial year 23-24 with regard to audit trail, wherein the audit log, some of those things are required to be put in place. Audit trails may be enabled at the accounting software level depending on the features available in such software, or the same may be captured directly in the database underlying such accounting software. Consequently, what has happened? Management of the company approached CAJ and asked him to suggest them list of internal controls which may be required to be implemented. Okay. Suggest them list of internal controls which may be required to be implemented and operated to demonstrate that audit trail or the audit log feature was functional, operated, was not disabled. So in this case, you are required to help CAJ, right? Now, what do you do? So let's look at the requirement. Now, in order to demonstrate that audit trail feature was functional, operated, not disabled, a company would have to design and implement specific internal controls, predominantly IT controls, which in turn would be evaluated by the auditors as appropriate. An illustrative list of internal controls which may be required to be implemented and operated, they are given below. So what is that? Let's try to look at that. Controls to ensure that the audit trail feature has not been disabled or deactivated. That's one. Controls to ensure user IDs are assigned to each individual. And these are not shared. Otherwise, its purpose will go away. Yeah. So what is the confidentiality then? Controls to ensure changes to the configurations of the audit trail are authorized. Logs of such changes are maintained. Controls to ensure access to audit trail backups is disabled, restricted. Access logs whenever the audit trails have been accessed, those are maintained. Controls to ensure that any sort of periodic backups of the audit trails are taken. Again, very important. And those are archived as per the requirements. Okay. Now, these are the things one needs to look into. Right? Now, moving further. Next. UV Limited is a large multinational company with a global outreach. Its business is voluminous, and due to the voluminous business, it has an in-house internal audit function to monitor day-to-day operations of the company. LK and Associates Chartered Accountants have been engaged to conduct statutory audit for financial year 23-24. Okay, so when you talk about LK and Associates, so these are the statutory auditors, right? Since the company has large scale operations, means operations are quite voluminous, there is limited time to perform the statutory audit, which is generally the case. Okay, things are always time bound, so that's how the things will always work. CAL, who happens to be the engagement partner, so this is from the statutory audit side, decides to take direct assistance from the internal auditors for certain areas of audit. CAL assigns, okay, now CAL assigns audit documentation part to one of his audit assistants, instructs him to do the requisite documentation of the working papers. Further, he tells his audit assistant not to document the working papers prepared by the internal auditors who directly assisted them, as it does not form part of statutory audit. Okay, now in this case, can we say whether CAL is right in excluding the working papers prepared by the internal auditor from the audit documentation? Guide him as to the matters to be included in the audit documentation in this scenario. Okay. Now, let's look at this. As per the auditing standard, using the work of an internal auditor. Now, what do you have there? If the external auditor uses the internal auditors to provide direct assistance, external auditor shall include in the audit documentation. Now, what do you include? First of all, evaluation of existence and significance of threats to the objectivity of internal auditors. So that's how you'll start with. Hear it? Objectivity, competence level before you engage. Because if that is not in place, will you engage them? No. So that's why, how has the statutory auditor evaluated that? This is something which the statutory auditor is required to document. Next, basis for the decision regarding nature and extent of work performed by the internal auditors. Okay. Who reviewed the work performed? Date and extent of that review. Written agreements obtained from authorized representative of the entity as well as internal auditors and working papers prepared by internal auditors. Otherwise, what is the use of that? Yes or no? If let's suppose they have done the work which was supposed to be done, which has been evaluated, yes, this is within the permissible limits. So that is very much a part of the statutory audit. Yeah, so that's how the statutory audit is being performed. So that has to form part of audit working papers. Otherwise, that part, how do you demonstrate that part has been audited? Okay. Now, in the given situation, CAL, who is the engagement partner, so he has taken the assistance, right? However, he instructed them not to document the working papers. Auditor therefore is required to document the working papers prepared by the internal auditor. Thus, contention of CAL to say that exclude these working papers is not appropriate. Why? Because otherwise, how do you demonstrate? How do you demonstrate the work? Okay, effectively, because such work is not in place. Yes or no? So that work seems as if it's not there, because without the working paper, without the documentation, how do you demonstrate the work was done? Right? So that's why it's very, very important to have that documentation also in place. He can't say that this is something we will not be obtaining from the internal auditor. Right? Clear on this? Now, before we move further, what we will try to do is we'll just try to quickly look into some aspects around this group audit as well. So let me just get on to this group audit part. Okay, so just give me a minute. I'll just open this document. And then we'll continue with some more questions around it, right? Now, internal audit is something that we talked about. Let's talk about this group audit piece. Now, what is group audit? We all understand. So when you talk about group, I think some of the definitions become important for the group to be looked at. For a group, we need to have two things in place. One is the parent company, and of course, various group companies therein. Now, who are going to be the group companies which will form part of consolidated financial statements? Because as of now, we are talking about the set which is consolidated. That is required to be looked at. That is required to be reviewed. Right? So that's what we'll look into. Now, for this set of consolidated financial statements, which again is similar to any other financial statement, the only aspect is what? Now, instead of one company, you have a lot of companies which are consolidated there. And you happen to be the auditor of this consolidated version. Yes or no? Right? So that's the understanding we have. Now, as an auditor, because you are auditing the consolidated financial statement, so that's why what do you have? You have the responsibility for consolidated financial statements. But therein comes a small catch. Let's try to understand, and that's where we have this very, very important auditing standard coming to picture. What does it require? Let's try to understand that. Say there is a company A Limited. It has got two subsidiaries, S1, S2, and say a JV. Now what will happen? All of these will be consolidated. Now in this case, some of the terms which are important. A is the parent company, correct? And we can say S1, S2, JV, these are all what? These are the components. That's the technical term you'll use for these components. These are the components, right? Now for the components, when you talk about consolidated financial statements, A Limited is of course audited by an auditor. Let's suppose that's the parent auditor, which you also call as group auditor. Yes or no? Or in some of the cases, you also call it as central auditor, right? For these companies, it is not necessary that same auditor will be auditing the standalone financial statements of these components. Yes or no? Yeah, that's one part to it. Further, when this consolidation will happen, so these components will provide some financial information to the parent. Yes or no? Now, is it a mandate that this entire financial information belonging to the group, means including S1, S2, JV, has to be audited by the same auditor? No, right? So that's where we have this concept of component auditor getting into picture. Now, what is that? Let's talk about it. It may happen that for S1, we have C1 as the auditor. S2, we have C2 as the auditor. For JV, we have C3 as the auditor. Who will be auditing this financial information which is provided to the parent for consolidation purposes? Now, as far as the parent is concerned, if you look at it from the perspective of the company as well as the auditor, now, do they have access to this information which is provided by the auditor or by the components? Yes, they have the access. But can we say there's financial information reported by the components is sort of audited or required to be audited by the parent auditor again? So that will be a kind of duplication. Yes or no? Yeah. So therefore, what will the parent auditor do? Parent auditor will use the work of another auditor, C1, C2, C3, in relation to what? In relation to financial information of these components. Okay. So he will using the work of the component auditors. Correct. So therefore, we can say that he will not be directly auditing the financial information of these components. Yes or no? He's not doing that directly. Yeah. Means it's not a duplication actually. Now let's suppose for a particular component S1 in relation to some financial information, there are some areas which the parent auditor believes is as important. Okay, quite critical. So what the parent auditor can do is parent auditor can instruct C1 to focus on that. So that's how the strategy or the approach of C1, you can say to a certain extent, will be driven by what the parent auditor requires. But eventually, who is going and checking that? C1. If let's suppose parent auditor wants to top it up by checking himself, what will he do? He will generally be asking the component auditor to provide the observations or maybe the approach which has been considered, or discuss that. He may get onto a call, he may get into communications, okay, which the parent and the component auditors generally do. But generally, parent auditor will not be doing this sort of duplication or repeating this aspect, right? So that's why, what do you do? That's why, as an auditor of the parent, you are basically relying upon the work of what? These components, right? Which are audited by component auditors. Now the question arises, can you do that? Answer is yes. That's what this SA 600 allows the parent auditor to do. Okay. And that is what the parent auditor will also specify in his report in terms of the group audit, that this is something which I am doing. Now, in this case, one question may arise. Okay, let's try to look at some more aspects around it. Now, when you say that the parent auditor will be sort of relying upon the component auditor, so does it mean that he'll not be doing anything about it? Answer is no. So let's suppose consolidated financial statements have been prepared. Now this will comprise of what? Parent and components. Okay. So for our purposes, this component was what? S1, S2, J. So these are passed on to the parent. Okay. Now, see what the parent will generally do, or you can say what the parent auditor will generally do is the financial statements of the parent. That's what parent auditor will audit. When these financial information are passed on by component to the parent, that's audited by the component auditor, C1, C2, C3. But on the top of it, while preparing the consolidated financial statements, one must understand the fact, which is quite critical. Huh? What is that? That is in respect of consolidation adjustments. Yes or no? So when you talk about consolidation adjustments, excuse me, now who will audit that? Is this audited by C1, C2, C3? Answer is no. So therefore, who will be auditing that? Again, the parent auditor will be auditing that. Now, this could be in relation to, you can say, gap changes at times. This could be in relation to consolidation adjustments purely, which you get to see. Yeah, but some of these top-up adjustments, parent auditor will audit. But when you talk about the component in particular, which has been audited by the component auditor, that is one piece which will be relied upon by the parent auditor, and therefore, in his report, what the parent auditor will say, that this is something which the other auditor has audited, and this is what I have used as it is. Sometimes what may also happen is, let's suppose there is another entity. Say we have this S3. Okay, and let's suppose this entity is too small as compared to the entire group. This entity is too small in size. Now, in this case, what do you get to see? because this entity is too small. So that's why it may not be really required to be audited. Okay. At times the management may take that call. And of course, the parent auditor will also evaluate that. Whether that is appropriate or not, considering the size and of course the materiality at the group level. Now, what is going to be the materiality considerations for the parent auditor? It has to be the console set. It will not be the standalone one. And therefore, when it comes to the components, the materiality is worked at the parent level and passed on to the component. Okay, which the parent believes. When we say parent, means the parent auditor believes will be appropriate considering the component. And accordingly, you may have some situations wherein a particular component may be unaudited also. Yeah. So there again, what will happen? Parent auditor will be reporting upon that as to whether that has been looked at or not. Because in a way, this component is what? It's only management certified. Because management prepared and that's been consolidated. So is there anybody who reviewed this? No. So this is something that you get to see in a section which is called as other matter paragraph of the audit report. Very, very commonly visible. So when we'll pick up this section of the audit report, okay, subsequently in terms of our discussions, we'll also get on to the actual audit report. Therein we'll get to see as to how this is really reported upon. Yeah, but you can say this is one of the criterias as around the other matter section in the audit report, which you get to see. And which is appropriate also. So there's absolutely no problem as far as that aspect is required to be considered by the parent auditor. Okay, now in this case, some of the other aspects which become important. Now, what are those? See, the way this entire process has to function. Now, let's try to understand some of those steps. So, what the parent auditor will do in terms of its communications with the component auditor, let me just call them as C1, C2, C3. See, component auditors are appointed by the company. Right? So their appointment has to be by the company, but the instructions to audit as to how that is required to be audited, what is going to be the audit scope, whether it's going to be a full-blown audit or whether it's going to be a review or maybe only the analytical procedures, right? Or is this not really required to be audited completely? So who is deciding that? Parent auditor at the console level is deciding. So that's why what will the parent auditor do? Parent auditor will make a communication through something that you call as group audit instructions. That's what the parent auditor will give to the component auditor, right? Group audit instructions will go out from the parent to the component. Okay. Now, once that is done, this instruction document, so generally it's a document, it's a detailed out, which will also have various requirements by the parent auditor. Not only in terms of instructions or the guidelines, but also in respect of some of the deliverables, which the component auditor is required to report to the parent auditor. See, in this case, when the report is given by the component auditor, who is that party to whom the report will be given? It has to be the parent auditor, right? These group audit instructions So they will cover each and every aspect: scope, materiality, critical areas, something that you call as significant risk areas, which the parent would have evaluated at a group level, right? Any specific instructions in accordance with this, which the parent wants the component auditors to follow. And of course, various deliverables. By deliverables, we mean to say the reporting requirements on the part of the component audited to the parent, right? So that's how the communication will happen. So they will also be talking to each other as and when required. On the top of it, any observation, if let's suppose the parent auditor may have, they may also be discussing that with the management of the component at times, as well as the management of the parent, because in fact the management of the parent is generally involved in this entire process, right? If there are any specific areas wherein the parent auditor wants to say involve more on, wants to look at directly, so can that be done? Of course, that can always be a top up to something which the component auditor would have performed, which the parent auditor will now want to focus more on. Okay, so that is something again which is very much doable on the part of the parent auditor to look at. So that can always be looked at by the parent auditor. Plus, another part. When the component auditor is through, okay, in terms of the deliverables, review of those deliverables happens to be the responsibility of whom? It has to be the parent auditor. So just by deliverables moving out from the component auditor to the parent auditor doesn't really work. Yeah, because this entire outcome, this entire approach of the audit, which has been partially performed by the component auditors as well for the parent auditor, where will the parent auditor get to see that? So where is that documentation available? That is available in these deliverables. Okay, so that is something which will be reviewed by the parent auditor, and that will also be forming part. In fact, this entire thing that we talk about has to be the documentation or the working papers of the parent auditor as far as the group audit is concerned. Okay, and if let's suppose there are some observations, say component auditor has, say for example, included a modification in respect of that component. Say component auditor has given emphasis of matter in respect to a particular area. Now in this case, what is going to be the approach for the parent auditor? Because financial information of component is what? That's nothing but a part of the console version. Yes or no? That's a part of the console version. So that's why all of these things which are reported upon by the component to the parent needs to be evaluated by the parent at a console level, right? At a console level. Why? Because if at a console level, parent auditor believes the impact of such modification, for example, such EM falls within the materiality range, then the parent auditor will pick it up as it is, something which has been reported by the component auditor. But if let's suppose the parent auditor believes no, even though at a console level, sorry, even though at a component level, this was, let's suppose, meeting the materiality criteria for the component. So that's why the component is reported. But if you now look at the console set, at a console level, maybe this particular observation in respect of which modification is given, say is not material at the group level, right? So in this case, parent auditor can always think of dropping that at a group level. Why? Because eventually something which is going out at the group level has to be evaluated from the perspective of group financial statement, from the perspective of consolidated financial statements. Yes or no? Because now, what is the subject matter of audit? It's the consolidated financial statement. So that's why it can always happen that a particular component may not be significant. And even if the component is significant, an observation in respect of that component could be significant at the component level, but may not be significant at the group level. Yeah. So this evaluation is done by whom? This evaluation again is done by the parent company. So that's something which the parent is supposed to, right? But when very important aspect, which this essay 600 talks about, happens to be what? Happens to be the reporting requirements. Okay, wherein he is picking the work of the component and reporting in his audit report that this is something which he is relying upon as it is. Okay, so he has done the top up, but of course, in terms of the reporting requirement, he is saying that this is something over which component auditor has done the audit, and that's what I'm just taking as it is. Something which you don't get to see in any other sort of reporting requirement, wherein the parent auditor may have engaged, let's suppose, an expert. Let's suppose taken the assistant from internal audit, right? Yeah. But over here, this sort of window is available, which is a very important part to be considered, which actually is quite significant as far as the reporting requirements at the consolidated level are concerned. Clear? Yeah. So now basis this, let's try to pick up some questions. So just give me a minute. What I'll do is I'll move on to some questions now. Okay, so just give me a minute. Let me just open this document. Okay, and for the purposes of our discussion, excuse me. Excuse me. Sorry. Yeah, so for the purpose of our discussion, let me just move on to this RTP piece as well. Right, so let me just pick up this question from the RTP first. So what I'm doing is I'm moving on to this RTP of September 2005. And I'll also pick up this January 2026. Okay, so now let me just move on to this question. Okay. Okay, so here we go. Yeah, so let's look at this. Okay, so this is what you get in case of, what you get in this RTP January 2026. TRP Limited is a holding company with three subsidiaries, namely T Manufacturing Private Limited, R Traders Limited, and P Services Private Limited. While auditing the consolidated financial statements of TRP Limited, auditor observed that although the management of all the subsidiaries have provided the written representations, okay, no formal written representation has been provided by the management of the parent company TRP Limited, right? Wherein they are acknowledging about what? They are acknowledging responsibility for true and fair presentation, something that you get to see in the rep letter. Okay. Furthermore, the auditor could not find any evidence that the management of the parent company has approved the CFS. Now, how should the auditor of the parent company deal in this situation? Okay, so now let's look at this as to what do you do as the parent auditor in this situation. So just give me a minute. I'll just move on to the solution part. See, if you talk about this auditing standard on the rep letter, it requires auditor to obtain written representation from the management and wherever appropriate TCWG. Yes, that's the requirement for the auditor. Auditor of CFS should obtain evidence that the management of parent acknowledges its responsibility for a true and fair presentation. Yeah, wherein they are also talking about as to whether the financial statements are approved or not. In addition, auditor of CFS obtains written representation from the parent management on the matters which are material to CFS. So for example, if you talk about it, so what would it include? Completeness of the components, as to whether all the components are included therein or not. Yeah, because CFS is comprising of what? Various components, identification of reportable segments, identification of related parties and the related party transactions, appropriateness and completeness of permanent and current period consolidation adjustments. Yes, that's how you will ensure as to whether the consolidated financial statements are complete or not. Means various elements therein. In the given situation, auditor needs to obtain the written representation from the parent's management, wherein the specific aspect around the responsibility for approval of CFS needs to be included. Yeah, because eventually it's the management which is responsible for that. If that is not done, then it's a problem for the auditor. If the representation is not provided, then what will happen? Auditor will have to look at the reporting implications. Yeah, so you can say it's not a small matter which the auditor can ignore. It's something which is important as far as the audit is concerned. Yeah, so that's why this is something which needs to be critically evaluated by the auditor if the management is not really getting into that part. Okay, now let's move on to the next one. So just give me a minute now. Okay, so now moving on to some more questions. Let me just open this another document. Okay, so now what I'm doing is I'm picking up another RTP. So this is the one that we have for September 25, right? So we'll try to look at some more questions therein. Okay, so there we go. CA Rajul has been appointed as statutory auditor of CFS of NAMI Limited. And we have this financial year 24-25, right? Now the consolidated financial statements include financial statements and financial information of a large group comprising of what? 9 subsidiaries. And now we have this element of the component auditor. Okay, now what do you mean by that? All these 9 subsidiaries are audited by different auditors. Means the parent auditor is not auditing them. So we have component auditors, right? Each of them audited by different auditor. Management of the parent, okay, this NAMI, has provided CA Rajul with the audited financial statements financial information, audit reports of all these subsidiaries. Following financial information pertains to these subsidiaries. So we have the total assets, total revenue, net cash outflows. Out of the 9 subsidiaries that you see, what do you have? 3 are located outside India. Okay, means there are 3 foreign subsidiaries. Fair? Okay. Their financial statements have been prepared in accordance with GAAP, of course. So if let's suppose you have a company in US, financial statements would have been prepared, say, in US GAAP. Say a company in any other country, so they may be using their local GAAP, not really India. So. Okay. And therein, the auditing standards of India will not apply. So the auditing standard of that particular country will apply. Generally, you will see ISA, International Standards of Auditing, you will see in those cases. Now, how should this parent auditor report this matter in the independent auditor's report on the CFS of NAMI? Okay. Also, draft a suitable para to be included in the auditor's report, making necessary assumptions. Yeah. So now it's all about framing as to how do you really put it down in the auditor's report. So let's look at this. Now moving on to the solution. So just give me a minute. Now, how do you really frame this? So let's get on to this part. So in a case where the parent auditor is not the auditor of all the components, which you generally find, okay, practically also you'll find this scenario quite significantly, then as prescribed in SA 6706, if the auditor considers it necessary to make reference to the audit of other auditors, which is of course the case, auditor's report on the CFS should disclose clearly the magnitude of the portion of financial statements which are audited by other auditors. Yeah, because the stakeholder should get to see what is the component which the parent auditor is actually relying upon, which he has not done himself. This may be done by stating the aggregate rupee amounts or the percentages. In fact, you see both in the audit report, practically. In respect of total assets, revenue, cash flows, because it's an important element as far as the financial statements are concerned, basis which the stakeholders will also take a decision. In the given situation, CA Rajul, who is the statutory auditor of the CFS, is not the auditor of all the components, which is included in consolidation. Okay, and he intends to refer to the work of other auditors. Okay, so therefore, will this reference be required? Answer is yes, and that is what you call as other matter paragraph. There's this section in the audit report here. So we'll talk about this audit report subsequently, and we'll look into an actual audit report also later on. So in the other matter paragraph, this aspect is required to be covered by the parent auditor. So how do you draft this? Because you may also be required to draft this. Now, because the parent auditor has not audited this, relying upon, say, another component auditor. So how do you write this? We did not audit the financial statements and other financial information in respect of 9 subsidiaries, whose financial statements include total assets of 2200 crore, asset because it's assets, total revenues of 1400 crores, and net cash flows of 25 crores for the year ended, because now we are talking about P&L and cash flow. These financial statements and other financial information have been audited by other auditors. Now, do you name them? Now, another question may arise that do you name them? Do you provide a table of all the component auditors? That's not what you will do. Okay, that's not something which is required to be done. Just simply saying that it's audited by other auditors is good enough. Okay. And then he says that such financial statements, other financial information, auditors' reports have been furnished to us by the management of the holding company. Now, talking about the opinion. Now the parent auditor is saying our opinion on the CFS insofar as it relates to the amounts, disclosures included in respect of these subsidiaries and JV, and our report in terms of subsections of section 143, okay, is based solely on the report of such auditors. So he's just saying that I'm simply relying on what they have provided. Now you may be thinking, but what about those top-up procedures? What about those instructions, those review? Of course, he has done that, but still, he is basically saying that I am relying upon something which the other auditor has done. Now, three of these subsidiaries are located outside India, whose financial statements have been prepared in accordance with GAAP of respective country and auditing standard of respective country used for the audit. Holding company's management has converted the financial statement of subsidiaries from accounting principles of those respective countries to, so that you can say, Indian accounting principles. So who will do this exercise? Of course, at the parent level. Now comes the point. Because this conversion has taken place, these adjustments have been passed on by the parent company, right? So that's why, what do? You'll have to comment upon it, right? So who has done the audit? It's the parent auditor. That's why the parent auditor now says, we have audited these conversion adjustments. He's not saying that this is again something I have not done, because that's his responsibility. He's supposed to do that, and he has done that. So that's why he's saying, I have audited these conversion adjustments at the console level. Our opinion in so far as it relates to balances, affairs of such subsidiaries is based on the report of other auditors and conversion adjustments prepared by the management of holding company and audited by us. So he's saying base figures come from component. We have done the top up and audited that. Okay. Our opinion on the CFS, our report on other legal and regulatory requirements is not modified. So he's also now moving on to the opinion part. Right? Clear on this? So that's how he will be reporting upon some of these aspects in the audit report, which is required to go out at the console level. Okay. Now moving further, just give me a minute. Now what I'll do is I'll just also open one article. Just a minute. I'll just, I think we have this one more. Okay, so now this latest one I'm trying to pick up, okay, to discuss one more question as the time permits. Okay, so now moving on to one more. Okay, so what I'm trying to do is I'm just trying to pick up this RTP for May 26. Yeah. So we'll look at this now. Okay. Yeah, so here we go. LED, a manufacturing company, has recently implemented new ERP for processing all financial transactions. During the audit, auditors noticed that some user IDs are being shared among employees. It's not clear whether the audit trail feature has been consistently active and secure. Access logs for audit trails and configuration changes are not routinely reviewed. Explain the purpose and importance of audit trail. Now, in this case, what are you required to focus upon? This aspect related to the audit trail, okay, which is there in the computerized accounting system. Plus, you are also required to advise as regards the key internal controls, which may be required to be implemented, operated to verify the functionality of audit trail. Okay, so it all comes down to what? This aspect related to the audit trail. So that's what the discussion is required to be done. Okay, so now let's look at the solution for this. So just give me a minute. I'll just move on to the solution. Right. So now when you talk about this audit trail or the audit log, it's a visible trail of, so first of all, you explain this. Now, whenever you answer this, what do you do? First of all, you explain this. What is this? So it's a visible trail of evidence enabling one to trace the information which is contained in statements or reports back to the original input source. So it's a chronological record of the changes that have been made to the data. Any change to data, including creating new data, updating, deleting data, must be recorded. So first of all, you explain about it. Records maintained as audit trail may include the following information. So what do you include there? When the changes were made, date and time. So basically, it's all about the time span. Who made the change? So you'll get to see this from the user ID. Yeah. So that's a very common functionality. What change? What change was made? Means what data was changed, right? Audit trails may be enabled at the accounting software level depending on features. I mean, see, again, it varies from package to package. So for example, you may have ERP, may have SAP, you may have Oracle. So generally this functionality you get to see, but it varies depending on the accounting package which is there. In order to demonstrate that this audit trail feature was functional, operated, and was not disabled, company would have to design and implement specific internal controls. Basically, we are talking about the internal IT controls. Now, what could those be? Controls to ensure that the audit trail feature has not been disabled or deactivated, of course. Ensure user IDs are assigned to each individual, user IDs are not shared. Okay, ensure that the changes to configurations of audit trail are authorized. Logs of such changes are maintained. To ensure periodic backups of audit trails are taken, they are archived as per the statutory period. Of course, whatever is specified. Now, in the given situation, the new RP system shows weaknesses. Why? Because the shared user IDs and the lack of clarity over activation and review of audit trail has been observed. Since an audit trail records all the data changes with user and time details, so what will happen? It will ensure accountability, reliability of the financial records. So therefore, if that is not properly enabled and monitored, so what can happen? Data integrity may be affected. So that's why, what should the auditor do? Auditor needs to ensure compliance of this. Okay. So that is eventually the responsibility of the auditor. It all comes down to that part. Clear on this? Yeah. So I think this is it that we had in terms of some of the discussions related to a couple of topics that we covered today. And I think we are through with this. I'm just hoping that you'll also have some more clarity, and this is how you should try to practice more and more questions, okay, in terms of your revision. So with this, we can just close this discussion now. Thanks everyone for your time today. So we can close this. Ashok, we are through. Yes, over Ashok. Yeah. Thank you. Thank you. Good.